Wow, it's completely new to me, but it's combining all my favorite things. Given my background in economics, the concept of Bitcoin as a new global monetary system is quite appealing to me. We are careful about our collaborators in light of recent developments in the US private sector. And reports from state treasurers. A movement has been initiated. Take Wisconsin as an example. They've included some spot ETFs in their pension plans, but they're not self-custodying Bitcoin or anything. You are aware that, in my opinion, that says a lot. Additionally, bond funds are being observed. They probably won't be the first to accept Bitcoin, though. Simply said, my perspective on bonds is different. However, because to Fed policies, they have recently been in a great deal of pain. Financial advisors are beginning to diversify their portfolios into Bitcoin. One stood out, but I can't remember its name. However, all of the 13 F filings have now been released, and it is fascinating to observe how each manager that added gold in the last quarter fared. Bitcoin added tenfold. Therefore, for the most part, they both use ETFs. Dude, it shed light on the situation. I learned a lot from that. Put BlackRock, Fidelity, and all those other huge institutions out of your misery. Bitcoin ETFs have already opened the door for big money to pour into Bitcoin. The next thing that happens will be even more revolutionary. Adding Bitcoin to their balance sheets include state treasuries like Wisconsin's and governments like El Salvador's. Cathie Wood of ARK Invest has recently shared this information. Cathie Wood and ARK Invest published a study earlier this year that looked at how Bitcoin could affect institutional investments. They discovered that by including Bitcoin, returns might be increased while risk was reduced. This is in line with current portfolio theory, which demonstrates that integrating assets with different risk profiles can increase returns while decreasing risk. Bitcoin is perfect for diversifying portfolios because it is not correlated with other assets. If institutions put the right amount of money into Bitcoin, ARK believes its price might reach $2.3 million per coin. According to Cathie's most recent interview, this line of reasoning renders Bitcoin unavoidable for governments and institutions worldwide. Wow, it's completely new to me, but it's combining all my favorite things. Given my background in economics, the concept of Bitcoin as a new global monetary system is quite appealing to me. I have been seeing Art Laffer. His enthusiasm for this has been palpable ever since we collaborated on our inaugural white paper in 2015. His enthusiasm for the cause has grown to the point where he recently accompanied me to El Salvador to meet with President Bukele and urge for more than just providing aid. Regarding Bitcoin, he is self-sufficient, but on the other hand, a convergence of Bitcoin and AI, along with reforms to the economy and education, presents a tremendous potential. However, Bitcoin is a part of the global monetary system. Since its developers in the early 90s were unaware that the internet would one day serve as a platform for commerce, financial services, and they were able to focus on developing the technology layer of the network. And then there's this new kind of asset that combines all three. Nothing like this has ever happened before. The topic of emerging market leaders seeking to move away from the terrible cyclical and extremely cyclical booms and particularly devaluations, is one that is highly pertinent today, and I believe that President Bukele is at the forefront of this movement. I can't believe the Nigerian naira has fallen by half or more in value in the past year. In March, the value of the Egyptian pound fell by 40%. Consider the devastating effect on people's purchasing power and wealth that would result from that. As a result, Bitcoin, which I'm sure no one here needs me to tell you, acts as a hedge against what we perceive as the seizure of wealth. Consequently, I believe its significance is growing. The dollar's value has been rising recently, Pound gains ground. When compared to the majority of currencies during the past decade or two, many people don't seem to get just how much it has increased, which is hurting some of these developing markets. Therefore, Bitcoin's arrival couldn't have been timed better. This insurance policy is accessible to anyone with a smartphone and an internet connection. Because the International Monetary Fund's disastrous actions when reserves run out are one of the disastrous repercussions, I believe that more and more individuals will take use of it, and that wise leaders in these nations will include Bitcoin on their balance sheets. Tax rates are increased. It reduces expenditure just when nations are starting to recover. They continue to rely on a plan that has already failed. What if I were the head of a new market? I have no idea. Heck, I even heard El Salvador is in the market for some IMF cash. The problem is that this doesn't work when it comes to helping developing nations recover from economic crises, at least from my perspective as a leader in an emerging market. Over the long run, it makes sense. Things will change, but not for the better, if you provide them cash and micromanage their every move. It's not based on what the market demands. We are hearing from state treasurers with whom we are collaborating and observing trends in the U.S. private sector, so we can assume that the movement has already begun. As an example, I think the state of Wisconsin has included some spot ETFs in their pension plans, not all of them, though not in self-custody. With Bitcoin or anything, I should also mention that says a lot to me. Bond funds are also appearing. They probably won't be the first to accept Bitcoin, though. Simply said, my perspective on bonds is different. But because to Fed policy, they have been through a world of hurt as of late. Financial advisors are beginning to diversify their portfolios into Bitcoin. One stood out particularly. I can't remember the name. It was fascinating for all the managers who added gold in the last quarter, but now that the 13F filings are out, we can see 10 more Bitcoins, yeah. Therefore, for the most part, they both use ETFs. Well, that sheds some light on the matter. Given the relative youth of institutional investment in Bitcoin compared to gold, that was revealing. Additionally, I believe that our study, which aimed to attract institutional investors, demonstrates that Bitcoin is a new asset class with low correlation with traditional financial assets. With the SEC's approval of Bitcoin ETFs and other wrappers, every major financial institution should seriously consider investing in Bitcoin. What your rivals are doing in the event that a novel asset class emerges with unequal return correlations to existing ones. In most cases, this means that adding Bitcoin to your current portfolio will result in a larger return per unit of risk than competing strategies. As a result, the environment will soon become highly competitive. Yes, it does make sense to dedicate a portion of your portfolio to Bitcoin because of the increased likelihood of better risk-adjusted returns. That hits home. We published our first white paper in 2014, the same year that we established ARK. In our early days, all sorts of mockery were directed on us. In a decade, the reversal has been amazing. Additionally, I believe that what is occurring is related to the events unfolding in Washington. Therefore, FIT21, I'm not sure if that's the right term, has 76 Democratic signatories, including Nancy Pelosi. What the fuck? Rather than viewing it as a radicalized form of money, as was previously believed, that has opened many people's eyes to its wider acceptability. Introducing a new asset class that embodies many of our core values: liberty, prosperity, and good government. This is fascinating. A lot of people are viewing this year's election as being about just one thing. In my opinion, that vote clearly indicated that yes, there was a vibrant Democratic opposition to the Republican Party. But that is now rapidly shifting. Also, I believe President Trump mentioned such things recently, collecting crypto donations for my campaign in an effort to connect with the community. I think that's quite important as well. Apparently, this relationship was crystal clear to Satoshi. Just kidding, I have no idea if it was ever considered, but there's this thing in the equities markets. It was really my very first project when I started working here. Actually, I don't think I've ever done a political economics project before. I applied seasonal adjustment and the 1997 Hong Kong census data to determine seasonality in the stock markets, because the first one dealt with a 4-year election cycle and how they affect trading. I also made it seem like the 4 years were just 1 year to make it easier to understand. Regarding the 4-year presidential election cycle, there is undeniably quote-unquote seasonality.